Today is one of the most anticipated days in the markets. Today we are going to be having the FOMC press conference and also the Fed rates, which is the interest rates decided by the Fed, right? This is the US dollar. It is the biggest economy in the world, and it is by far the one economy where it is the powerhouse of the entire world because their currency is the exchange of every other thing. Now, if this doesn't go well, we'll see a lot of tanking. If it goes well, we'll see a lot of profits, or rather a lot of run-ups and a lot of gains in the US dollar. This is also seen because recently the US dollar has been the center focus in the markets. You can take a good look at the DXY. This is the US dollar index, and it is clearly showing bad and bad and bad. Like not really bad, but like it's been tanking in recent times, all the way starting from the this was the 13th of January, and ever since the 13th of January we have seen it go down and down and down. Also, before I forget, we're also going to be looking at the current situation of the trader in 3 days challenge, which I entered with Tori Trade. This is Tori Trade's way of giving back to the public. Naturally, now it's trader in 4 days because today she's going to meet her Uncle Mike, and we're going to see how that goes by 5 o'clock Nigerian time, Lagos time, West African time. That is GMT +1 if you are anywhere within these zones. 5 p.m. is the time, final day, final announcement. So we'll see how it goes. So if you're out there and you want to see what forex trading really looks like, this is the channel for you. Like, trust me, this is the channel for you. This channel is the raw documentation of actual progress and regressions that a person who is into forex seriously and also has a 9-to-5 job is like. This is literally the whole shebang. There is no hiding anything, there is no pretending, there is no extra editing, there's no fini family. It's just seeing the real raw experience. Seeing your trades go straight into profit, seeing your trades go into profit and then go back to entry and stop loss, seeing your trades go straight into stop loss. That is what this channel is all about. Okay, today we have the FOMC expectation, and just in case everybody is wondering, what the hell is FOMC? FOMC is the Federal Open Markets Committee. As you can see right here, Federal Open Markets Committee, FOMC members. And these are the people that determine the rate of the economy, or rather the US dollar. And this decision they will be making today is literally going to set or break a lot of things for a lot of people. So recently the US dollar has been tanking hard, and in such situations we have not so good data for jobs, we have not so good data for growth. Let's take a good look at this is my personal indicator, my personal fundamental analysis tracker, and you can see that the US dollar has had lots and lots of information that is not looking so good. They are literally on neutral ground in every phase you look at. The growth, the jobs, and the rates and everything is all neutral. But in recent 14 days, they've been having some good lagging indicator of situations. For those who don't know what lagging indicator, leading and coincident, I'll put a video link up above. I'm going to be trying to explain that in a short video, and then I'll put the link up above in this video for you guys to see. But all that by the wayside, so I don't waste your time. Everybody is hoping, or rather the analysts are hoping for rate cuts. As you can see right here, you can see it. They are forecasting that they will cut rate from 4.5 to 4.25. However, this doesn't mean the federal market, or rather the Feds, in this case, people like Jerome Powell and the rest, they are just going to wake up and change the rates because analysts are saying that they should, right? They are looking at a lot of data. Jobs. They are looking at growth in the economy. That is retail sales, people buying, people selling, the situation of the economy at large. That's what they are looking at, and you can see they've held this position for quite some time. Let's see more and see. You see the 4.5% has been since December, and they've held it strong all the way till now. So why should they change? Why should they change this rate now? Well, the US dollar is under pressure, like severely under pressure. You can see this tank all the way from here is not funny. Like, it is not funny. It has lost a huge percentage. Don't wait from 100, from 109, 9-ish to 96. That is almost 10 out of it. Almost 10. Actually, it's more than 10 right now. It's above 10, about 13 out of it. So $13 loss of price. Like the people call it deflation. This is inflation. Actually, this is inflation. So people are not able to afford things they used to buy before for the same price, meaning things have gone up in price, in value, and then there are no jobs, or rather jobs are low. So if we go look for job data, which is things like unemployment claims. Let's go for unemployment claims. Now, sorry, unemployment rates. I said claims. So unemployment rates, you can see the rates. The previous rate was 4.2 and it went up by 0.1%, which is now take this is a percentage, because percentage can mean anything. Percentage looks as if it's small, I mean 0.1, but if you're talking about something like let's just say you're talking about 1 million people, right? 1 million people, right? And 1% of this is about 10,000 people, and then 0.1% is 1,000 more people in just a short time frame have increased. Like 1,000 more people are now jobless. Now this is just looking at the number of 1 million. The US dollar has millions, so imagine the millions of the US economy and then make it 0.1% of that increment in terms of rates, people who are getting unemployed. You'd see it is really scary, right? It is now scary. In fact, like seeing the whole picture is now very scary. Now we're going to see things like claims. Let's see now the jobless claims, the initial jobless claim, the continuing jobless claims. These are, like I said, they are leading indicators, because if people do not have jobs, they cannot make money. If they don't make money, then they cannot buy things. If they cannot buy things, then business should not even exist in the first place, right? Businesses are going to go out of order. Now the continuing jobless claims, this came out this week, right? So on 11th. Now we can see the number reduced, right? Means some people got job, people who were jobless before got job. Now but the initial jobless claim, right? This one went up. Now take a good look at this. So people who got job was about 11,000, and then people who are now claiming they are jobless is 28,000. We are deficit here. We are deficit of about 17,000 already. And then jobless claim in average, like 4-week average, because every 4 weeks they do an average of 4 weeks. And in the 4 weeks average, we've seen an increase of 9,750 jobless claims, meaning we're having more jobless claims than we're having people who are getting jobs. Hence, the situation is at large, right? It means there's no job, or possibly there's job, but people aren't employing, or people aren't getting it, right? So that's just it. And then add that with inflation rates, things like inflation. Let's look for inflation data, CPI. That's CPI right there. So this is like the inflation data itself. Now inflation data is printing quite good, right? Inflation data went up by the same 0.1. Sorry, it went up by 0.1. Now it's printing good situation that the inflation rate is not bad, right? It's not bad, but if people are not getting job, inflation rates going up is scary. So put that whole situation, and this is why the current Fed rates is really looked at. And the Fed rate is literally going to be a direct impact in this case, because if they increase the rate, right? If they increase their rate, it means companies will not be able to, or rather, not that they will not be able, but they would likely not want to collect loans so that they can expand their businesses. So imagine you have a business that's going to cost you about $2 billion, and then the loan rate, let's say the interest rate as of now is 4%, right? 4.5%. So you're going to pay 4.5% of that, right? Now, if you're going to pay 4.5% of $1 billion, it means you're going to be paying something around about that's around 450,000 or so. I think 4.something million or 450,000, one of the two, and then that goes up. You'd be scared to pick up 2 billion anymore, right? You want to reduce your hand from picking 2 billion, and because you're not picking 2 billion anymore, you will not be able to expand as much as you wanted to initially. Now, because business expand, you have to employ people. That's the whole situation. In the situation where they reduce the rates, you would oh, I can now actually pick more. After all, the amount I'm going to pay is not up to the 4 point something million or 400 and something thousand I'm supposed to pay back when I'm paying back, right? So you end up taking more. So this is why everybody is literally looking here right now. If they cut the rates, and if they do not cut it well enough, right, businesses will not grow enough. If they cut it too much, businesses will grow so much that they will employ too many people, and then too many people will have money, but the leftover set of people will be left behind, and then inflation is going to skyrocket. That's like a long story, but that is the whole short situation of the FOMC and the Fed interest rates decision today. Now, this is everything I know about the situation. This is the meat of the situation. Now let's head into something else. What we're going to head into now is an update for Tory Trade, right? I have been trading the trend line for the past 2 days. I've been in the 3 days challenge and it's been beautiful, absolutely amazing. Victoria Duke absolutely delivered everything she promised. The entire situation for free, but there are still some gatekeeping, right? The bounce and retest and the rest. Obviously there has to be. That's how she's going to have to do like other things. She cannot do everything in 3 days in the first place, right? But today she's giving like 1 extra day. She's going to go with Uncle Mike, which is the person who mentored her how to trade trend lines. Now, Tory Trade is a trend line trader. She's known for trading trend lines. She's good at it. Now, what is the situation? Why am I bringing this to your attention? Well, for the past 3 days, I have taken a lot of trades. I have taken, not really lots, I've taken about, this is about 8 trades or so. 8 trades. I missed the tutorial trade she did, and I have made 8 trades in 2 days. And in 8 trades in 2 days, you can look at it right here. This is my journal. I just made a very simple journal. I don't want to have to write too many things. I'm going to add end times to all of them and then calculate the duration of each trade, but this is it. So this is what I did. I entered the trade. These are all trades are all based on trend lines, and I'm just going to show you the remaining ones. I showed you guys the first 2, which ended up in loss. That is the 5 minutes and the 15 minutes trade right here, the Australian dollar, US dollar, and the British pound US dollar right here. These 2, they ended up in losses, and those are like scalp trades. I think it's majorly because of the time I entered the trade and then all those other stuff. However, let's look at the rest sets of trades that I took. But those were on like the higher time frame, the hourly time frames, as you can see. And all of them, first and foremost, I'm going to tell you, all of them ended up in profit. Every single one of them, except one ended up in break even. Okay, one ended up in loss, but I can't even remember that particular one, but one ended up in loss. The rest of them, massive profit. Now let's look at the chart and see what they really look like, right? Let's look at what they look like. Let's go to the this is the British pounds US dollar. I entered another trade again later, and this is it. So right here you can see I'm not gonna gatekeep or hide anything. I'm just going to show you guys quick update. So the downward trend line was broken. That became the action line. As soon as it broke, I entered on this candle right here at 7 a.m. and I held this trade all the way till this point. Now I would have let the trade run and then got stopped out. Probably I would have stopped out here, but I kind of stopped out a little bit earlier because I was about to go to sleep and I didn't want the trade to run into the night because it was already going close to my safety line. So obviously it's going to hit my safety line, and safety line is not like a stop loss line. Stop loss is something I have to always move on, all that stuff. So I just ended the trade. Same thing with most of this trade. I ended them all through because I was going to sleep and I knew they were going to go towards the safety line and I won't be there to see it. Same thing. Now this other trade didn't go towards the safety line at all. I just ended this one because I was going to sleep. Like I said, this one is so far from the safety line. You can see the safety line. This is the original safety line, and then this is the new safety line due to the market structure being printed. And I was trading it alongside with this one, but however, I was going to go to sleep, right? I was going to go to sleep, so I just closed it out. It's a 4 hours trade, so I entered not too long, and then price shot up, like absolute shot up, and then I left at the top, almost at the very top of it, not the top, but somewhere around here. I just left and went to sleep. This is the Australian dollar Swiss franc. This was a 4 hours time frame trade. You can see I always tie the time frame I'm trading with here. Now, I want to say something. I want to unify the way I trade. I want to make it a particular time frame because I tried something yesterday. I don't have a big account. I don't even have up to 1,000. I don't even have up to $500. And then I went into my real account. I didn't place any trade. I was just looking at, okay, if I'm going to be placing my stop loss with this time frame, how much should I risk, or how much is the minimum risk possible? And I noticed the minimum risk were around 20 something, 30 something dollars, which is a lot. It is way more than 1% of what I can offer. So what I did was I noticed I have to actually go down time frames to be able to trade this strategy with 1%, or I need to increase my capital such that if I'm trading 1%, I won't be scared to lose those 20, 25, $30 space available. So the cheapest I can risk, because this particular trade was a trade I used to test, and the cheapest I could risk was around 20 something dollars, and that is about 50% of my, almost 50% of my current amounts accounts. So I just remained here. But what I'm doing right now is I'm gathering data. I'm trying to tell myself this is what it is. Is it good? Is it a good strategy to use? If it is a good strategy to use, then I might as well just, quit every other strategy I've ever used and focus on this one. Just like I created RU, focus on supply and demand, created that, and now coming here to see if I can do this. If this works for me, then I may have found myself the strategy that I'm going to sit with forever. This is the Australian dollar, Japanese yen, and this is a trade. I cut it out in loss. You can see where I cut it out right here, this candle right here in this candle. So it was in loss. Then that's the one that ended up in loss, the only one. I think Australian dollar, Japanese yen. Oh, I made a mistake. It was supposed to be negative. Yeah, so that was it. That was the one I knew I lost one of them. So I lost one of them, and then this is I think that was all. Yeah, that was all. I was analyzing this one this morning, but at the point in time I just stopped because today is FOMC and today is rate release, and we do not want to be placing trade before this kind of situation. I want to wait, let the market spike and create good structure. Then I will be able to start analyzing and placing trades on it. Also, I would like to see you guys at 5 p.m. today. If you are in Nigeria, if you whatever you are, tell you the time, 5 p.m. whatever time you are, and then let's try to achieve trendline tradings together. Thank you to Trade. Thank you all, and I'll catch you all on another one. Peace.